Good morning, distinguished guests, colleagues and partners. Welcome to this session titled Finance for Tomorrow, Integrating ESG into Investment Strategy. Global capital is moving increasingly to more sustainable, resilient and responsible investment. ESG integration has therefore become essential to creating long-term value creation and risk. As His Excellency State Minister for Planning and Development said earlier, it's not a parallel agenda. For markets such as Ethiopia, it's a strategic opportunity to embed credibility, transparency, and sustainability into the foundations of a growing capital market. So today we look at what ESG integration looks like in practice, and how ESG-aligned instruments can be used to mobilize finance for the country, and what is feasible for Ethiopia for now. So to set the stage, I would like to invite my colleague, Cicilia Bjerborn to deliver the opening presentation.
Hello, everyone. Endman Adarachu. Cicilia Bjerborn Mura is my name. It's a pleasure to be here. Congratulations to ECMA and the Ethiopian government for this excellent conference. I think this panel is intended to be quite practical, but I wanted to say a few words to frame the conversation. We are talking about ESG integration, which stands for environmental, social, and corporate governance issues. Another term to be used can be sustainable finance or more narrow green finance. But basically it means taking into account long-term factors such as environment, social, and governance issues that may have an impact on commercial success and investment return over the short, medium, and long term. So let me start with a simple framing. Oh, I'm the one to switch here. So around the world and in Africa, sustainable finance or sustainability can be understood as both a risk and an opportunity. On the risk side, climate shocks are intensifying. Africa is already losing at least between 3 to 5% of GDP annually due to climate-related disruptions. And Ethiopia, in particular, alongside many other countries, is facing increasingly erratic weather patterns, creating pressure on food and energy systems and food security, and many related issues. And the investment need globally to address climate resilience, climate adaptation, and reducing the impact of climate change is estimated at 3 to 5 trillion US dollars. So this figure may vary depending on what scope we are talking about, but huge numbers, clearly. And the risk also lies in that increasingly, or for quite a long time now, investors are screening out investments that are not taking these factors and risks into account. So that can lead to less access to capital and increasing cost of capital. And so this can all sound quite depressing. But on the other hand, if we do incorporate strategies and measures to help solve social and environmental challenges, then there is an upside. So in comparison to the 3 to 5 trillion I said that it needed to address these issues, the good news is that there is over 40 trillion of US dollars available globally with a sustainable investment mandate. And they are looking for these investment opportunity. Africa currently receives probably less than 1% of this capital, but increasing. And also additionally, on the continent, we have around 3 trillion US dollars equivalent in domestic currency in the domestic institutional investor base. And they are also increasingly, as we've heard in panels yesterday, looking for investment opportunities outside, beyond the sovereign bonds. So this all creates an opportunity. And we can see this very concretely, that we are attracting more of this capital flow. FSD Africa has supported some 25 green and sustainability bonds over the past 5 years or so, amounting to nearly $2 billion in local currency mostly. For these bonds that have been issued across the continent, across sectors. And the good news is that Ethiopia's national priorities in the green economy strategy and so on, focusing on agriculture, energy, green manufacturing, digital inclusion, these are all fundamentally ESG aligned, so to speak. They are green, they are sustainable, so very suitable for these kind of instruments. And tap into these pools of capital. So broadly speaking, the question for Ethiopia is not whether sustainability and ESG matters, it's whether these trends become risks or opportunities, and certainly for Ethiopia, the opportunity is clear. So in that same vein, from a capital and financial market perspective, ESG integration is becoming both a requirement by regulation, by investor expectation. We have massive growing regulation globally in this space, from the EU, in the US as well, focusing on sustainability-oriented reporting and disclosure. We have the IFRS S1 and S2 released about 2 years ago that set global standards for sustainability integrated financial reporting. And of course, ECMA is leading the way in Ethiopia with plans to develop helpful guidelines for issuers of securities in the market in this regard. And this is all based on the understanding and the data that tells us that sustainable investments are better investments financially over the long term, but also now more increasingly the medium and short term, meaning that companies that have good sustainability strategies do better financially on average. The data tells us that. And we can also intuitively, I think, agree on that. So ESG has moved from a voluntary niche that it was perhaps 30 years ago to the mainstream of global finance, where investors, lenders, rating agencies are all expecting to see good, reliable ESG data based on credible performance. So when we talk about sustainable finance, we often hear about taxonomies, and we will get to the point about green and sustainable finance taxonomies, but I also wanted to mention the taxonomies of investments of asset classes. So sustainable finance or ESG can be applied to across asset classes and instruments. We often talk about green and sustainable bonds, so those are debt instruments. It could be securitization, but it's obviously a quite safe and familiar asset class for institutional investors globally to get involved in. And also we may have a lot of banks that are looking to list in the market, and banks are often leading in their countries in terms of issuing these instruments. And it's also very appropriate because of the role of aggregating capital, and they can then on-lend. But it can also be applied to other instruments, equity funds, ESG listed equity funds and indices. It's also worth mentioning the increasing relevance of green guarantee and insurance products that enable institutional investors to take part in these new instruments comfortably. And also really on the sort of leading edge, innovative financial instruments that can attract concessional funding based on their outcome focus. Jemima is looking at me, my time is almost up. Based on their outcome focus in areas including environmental resource management, but also importantly, social outcomes, health, education, and so on. And we can also talk about the development of the carbon markets in this bracket. And this is just an overview of the pools, different pools of concessional capital that is available. FSD Africa and the partners that are here today have partnerships and collaborate and draw on this capital. We can support with the GCF Green Climate Fund accreditation and so on. So it's just to illustrate that there is a lot of this capital available. So this is all quite high-level talk. It's good to sometimes bring it down to what can organizations and entities actually do to integrate sustainability practices. And there's a lot of helpful guiding framework and internal management systems that can help with this, that have been around again for 30, I'm referencing 30 years because that's almost how long I've worked in this space. So we are not inventing things from scratch, but when it comes to what the actual tangible areas of focus and action may be, it depends on what organization you are, what size of company, are you an issuing entity, are you an investor, are you a regulator, and so on. And so here are just some examples. They may or may not be relevant to you, but just to mention a few. So for banks, it could be simply focusing on increasing lending to SMEs. Or setting up specific lending product for climate smart solutions across sectors, lending more to women-owned businesses. And for SMEs, which also include medium-sized companies, right? These can be quite large companies in the African context. There can always be opportunities to showcase how you provide solutions for environmental and social challenges. And maybe you are completely focused on such a sector in waste management, recycling, water purification, agricultural technology, and so on. So there is an opportunity in every sector to be green. I won't talk through all of them, but it's really for your organization to look at what are the core areas that drive value, economic, financial value in my organization, in my activities. So what should I therefore focus on? And it's better to focus on one thing that is really relevant and material and have an impact in the market overall, rather than doing 5 or 10 things that are not really relevant to your core. And we have many examples, as I said, of how this has worked on the continent. 25 issuances supported across countries. Some examples here in student housing, in water, utilities, and many banks as well. And this has led to oversubscription over time, better terms on the financing, longer tenors, lower pricing, and also accessing a wider pool of capital. And again, coming back to taxonomies, this is my last slide here. Taxonomies, when we talk about these sustainable investment instruments, green taxonomies, sustainable finance taxonomies become very relevant as guidelines for what we mean in terms of sectors and economic activities that are considered sustainable. And there are, many of these taxonomies have been developed in foreign markets. European green taxonomy is perhaps quite well known. But there has also, over the past 2 years, been an effort to develop an African taxonomy that provides these guidelines with the African context in mind and focus on benefit for social outcomes as well as environmental outcomes. So this is something that you may be of interest, that may be of interest to you, and that can be helpful for the Ethiopian market as a benchmark as you may proceed and develop your Ethiopian taxonomy. So I'll stop there. I will just leave you with what some of the concrete next steps for consideration may be: identify what the core risks and opportunities are for your sector, your business. Number 2, build a clear and simple sustainable strategy to start with. Secure partnerships from any of the partners that are available here today. FSD Africa alongside FSD Ethiopia. We have UNDP, we have IFC. There's no shortage of support available. And technical support to develop these instruments. You don't have to do everything alone in-house. And then communicate your ESG performance through the capital markets, through reporting, and finally grow, prosper and succeed. The data says that sustainability-oriented businesses do better financially than others. So I'll stop with that. Thank you so much.
Thank you very much, Cecilia, for that insightful framing. I think it's very clear that the opportunity is there and that ESG is both strategic and inevitable. So we'll now transition into our panel discussion. We will keep it brief with the comments because we want to just use this as a starting point for further discussions and engagements during the conference and beyond the conference. So let me just get into it. So Dan, I'll start with you. From a government and economic reform perspective, how do you see ESG integration aligning with Ethiopia's economic priorities, broader policy priorities, and economic reforms?
Thanks, Jemima, and good morning, everyone. I think there are sort of two levels or two ways of looking at the alignment between ESG and Ethiopia's reforms. I guess on the one hand, it's the what, and the sort of the essence of ESG is well, at least on the opportunity side rather than the risk side, is green growth, and this aligns very neatly with Ethiopia's core strategies, whether it's the 10-year development plan, the climate resilient green economy strategy that's been around for a while, and we're seeing this more and more, as all of you will know. COP32 is going to be here in a couple of years. Congratulations to the government for securing that. So the substance very much aligns with those overarching strategies, and I think ESG will enable mobilization of finance and directing of finance to the initiatives and the asset classes that deliver on that green growth, whether it's energy, sustainable agriculture, sustainable transport. So that's one way of looking at it, the what. The other is the how, and I think this is the slightly it's more subtle, but it's more interesting and I think more important. ESG really is about transparency and disclosure and the sort of the dynamics and disciplines that are required to deliver on ESG and to report against ESG are exactly the sort of more open, transparent, market-oriented objectives that run through the wider homegrown economic reform program in Ethiopia. And I think that's where the really interesting connection between the two is.
Thank you. So Assefa, turning to the regulatory dimension, from a regulatory perspective, what role will ECMA play in guiding ESG integration and disclosures in the market?
Okay, thank you, Jemima. As regulator, the ECMA can play a central role in embedding ESG into issuers' practices. Currently, ECMA is working with FSD Ethiopia Africa in developing guidelines for green and sustainable linked instruments. We've also worked with IFC on developing corporate governance standards, especially the standards has specific principles that we considered pretty much important for embedding environmental and social governance consideration for issuers. For example, one of the principles that we considered is for requirement, the ECMA in its standard requires issuers to adopt internal policies that considers environment and social consideration, including ethics, stakeholder treatment, and supply chain impacts, and then embed that into the ESG strategy. We also require board-level accountability from issuers. We want the board to have competencies in the areas of environment and social issues. Also, to exercise their oversight role in terms of, monitoring whether these issuers, the company, has considered, environment and social issues in their strategy and operations. We also require issuers to identify risks, especially environment and social risks, that could impact their activities, and then also embed in their strategies. But most importantly, we also require disclosures. We want issuers to report material sustainability issues to be incorporated in their annual report. That could include, strategy, oversight, risk, and these issues should be reported as part of their disclosure. Thanks.
All right, thank you. Louise, IFC is a global development finance institution. What are global investors looking for when assessing ESG performance in emerging markets such as Ethiopia?
Is this working? Great, thank you. And thank you for having us on this panel. I think this is a topic that's very close to the heart of IFC. It's embedded in the way we operate. And Cicilia was actually a colleague of mine back at the IFC eons ago when... and this builds very nicely on what you were saying about do listed companies have the strategy, the management systems, and the disclosure to demonstrate that they have put ESG into how they do business. And I'd just like to pause and go back to where does this come from? And the modern understanding of ESG actually traces its roots back to South Africa and apartheid, and in the 1970s. There was something that was developed called the Sullivan Principles. It was an initiative by the Reverend Sullivan, who was on the board of General Motors at the time in South Africa. And there was huge pressure for companies to divest and move out of South Africa. But he wanted GM to be a force for good in the country. So he wanted to find a way. He was a civil rights activist in the US, and he wanted to find a way that GM could stay. And the only way that GM could stay, according to him, was if they had higher labor standards than the South African government. So we know that the South African government was not treating workers, and particularly non-white South Africans, properly. And so the labor practices needed to be better. And at the core of ESG, you'll see today, it's the same fundamental labor practices that are expected under workforce. Then go forward to the 1980s, and we had a major oil spill in Alaska. It was the Exxon Valdez oil spill. It had a massive detrimental effect on the environment, fishing communities, wildlife, hugely polluting incident. It led to the development of double-hulled tankers, but it also led investors to team up with NGOs to come up with a set of criteria or reporting indicators that could be used to gather data and assess whether a company is going to be a risk on environmental and social issues. And that gave us the Global Reporting Initiative. By the 1990s, IFC was under pressure because of projects that we were involved in where communities were not resettled properly or not treated properly in big construction of pipelines or infrastructure. So gradually you can see that the list of ESG issues started to build. And so we actually know what those things are. It's not a mystery. So that's the first thing I want to tell you is there is a list, a core list of environmental, social, and governance topics that pretty much everyone agrees on. And then for every sector that you have that applies that list, they'll adapt it to how those particular topics apply in that sector. But to reassure you, as more regulation comes in, there is a list. This is an established practice. And there are experts that you can hire to build up an ESG system in your business. And answering the question, what are investors looking for? Well, since the 1990s, IFC has made it a requirement that if we invest, we have to see that there is a management system in the business and that there is a commitment by the business to implement that management system, and that it is fit for purpose to assess the material, environmental, and social risks that are going to impact the business and therefore could impact the investor. The second thing we want is we want to see that the leadership of the business is thinking strategically about how to improve their performance, their efficiency, reduce their costs, become more competitive, grow their market share, build their reputation using environmental, social, and governance performance. The third thing, and this is something that Cicilia mentioned, was that we are moving into an age where investors now also want impact. They want the housekeeping, they want the risk management, they want good performance, they want future-proofing, but now we're seeing growing demand for impact. So what additional value can you offer in terms of contributing to social and environmental assets of society? Thank you.
Thank you, Louise. Let's turn to how we can translate these ESG ambitions into practical right-sized steps for Ethiopia particularly. So I'll turn to you, Jerome. What immediate practical steps can Ethiopian issuers take in the next 6 to 12 months to begin that process of credible ESG reporting?
Yes, thank you. Good morning, everyone. So just to start giving a little bit of context. So right now, sustainability reporting in Ethiopia is not very developed. It's typical for a nascent capital markets, but just about a few state-owned enterprises and a few banks are reporting on sustainability matters, but it's not to the standards that Cecilia was mentioning. At the same time, the regulator is pushing, as Assefa was saying, ECMA is producing some guidelines. We also had the Chamber of Commerce ESG guideline. The National Bank is reforming its corporate governance. And the Association of Accountants, ABE, is also pushing for mandatory reporting, I think, around 2028. So pressure is building. So what do you do with that? I think for me, the most important, and I've had a lot of experience with reporting, is to make the cost benefit of reporting work. That means the benefits of reporting need to outweigh the cost. And the costs are significant. So the way I would tackle that is to tag along and use existing priorities of business as they are trying to access capital markets. What I mean by that is we heard yesterday the importance of corporate governance and today. So ESG disclosure is governance, is corporate governance, is good corporate governance. You know, there's an interesting saying, I think it's by a US Supreme Court justice, that sunshine is the best disinfectant and streetlights are the best policemen. So this idea that transparency is a way to build trust. At the same time, on the governance aspect, ESG is good governance as well, and that's something that IFC and investors have always advocated. ESG is first G, and the reason for that is that a board of directors needs to look out for not just its shareholders, but also stakeholders of the business that are equally important to its success. The other practical thing that where the cost benefit of ESG reporting can work is sustainable finance. So, you know, just in the way we've talked all day yesterday about the fact that financial investors need access to good financial information to price risk, to understand the upside of the business. Similarly, a sustainable investor will need to have strong ESG data to understand the opportunities of the investment on a contribution to society, but also the ESG risk. So what practical things can we do in the next 6 to 12 months? The first thing I would say is focus on governance. You know, make sure you set up the board establish risk management policies, basic disclosure, then layer on the E and NDS, but as Cecilia and Louise were saying, just focus on the key material topic. You don't have to report on everything, every sustainability topic that exists. And then third, start to disclose the good that you're doing. So when we talk about the fact that ESG is both positive and negative, there's a lot of business that are doing incredible things for society. And that's the type of impacts that investors are looking for. So start to track a little bit what you're investing in that field and the results that you're having. I think that's a good way to start. So, yeah.
Yeah, thank you. So, Assefa, Jerome has mentioned that they need to focus on some key metrics as opposed to trying to do everything at once. So, for Ethiopia's context, what are some of those key metrics that you think could be feasible for Ethiopian companies that are at this stage or in the market?
Thank you, Jemima. So yeah, this is an emerging market. So in countries like Ethiopia, the starting point could be focusing on existing, governance structure and on structures that we have available data. For example, we could start on corporate governance. We look at the board composition and diversity, and then also the competency of the board in terms of understanding the environment and social considerations. So that's one matrix. Basically, the corporate governance is a good matrix to start with. Another area that we have data, any employer will have, data related to human capital. HR departments have a lot of data on, employment profiles, gender compositions, and then also, HR related information. So those are the areas that, companies, Ethiopian companies could focus on. Then in the areas of, that's basically the social consideration. So in the areas of environment, we also have, data on energy consumption, water use and waste management. So these are these basic areas that, Ethiopian companies could start, before moving into more advanced requirements for sustainability reporting. So basically I would focus on these three areas: corporate governance, HR, social issues on HR, and then also basic environmental considerations to start with.
Yeah. All right, we are running out of time, but I want to make sure that we address the issue of mobilizing sustainable finance, which I think is an important conversation for Ethiopia. So Dan, let me turn to you on this one. So what policy actions or government signals do you see are critical to enabling sustainable finance for Ethiopia? Sustainable finance instruments, so things like green bonds, sustainability-linked bonds, yeah.
Yeah, so through our implementing partner, FSD Ethiopia, along with other partners, we recently funded a scoping study looking at a range of sustainable financing instruments in Ethiopia and their adoptability and the things that would need to be addressed in the regulatory framework and beyond to be viable. I think I won't go through all of the conclusions from that, but I'd recommend it to those of you interested in the topic. I think some key things that came through, things that we've already heard this morning. Cecilia, your point about green taxonomy, I think this is a critical first step, actually documenting, understanding, having an agreed articulation of what green means in Ethiopia, and I think that's needed to build confidence and trust and consistency. So that's number one. I think one thing perhaps we haven't spoken about as much so far today is the pipeline, and I think projects and initiatives that meet these standards and meet the taxonomy, I think is going to be really important. So actually bringing these frameworks and language down to the project level to build capacity there for them to be able to articulate how they're meeting ESG requirements. This is another one. I think, of course, and a lot of the emphasis throughout the summit has been on setting a good regulatory framework, Ethiopia has an opportunity here. The ECMA has an opportunity here to be designing an ESG by default framework, and I think I see that commitment in ECMA, and I've just encouraged them to continue that. I think one of the, Jerome, you mentioned you've got to get the cost benefit right for this to really take off. And I was thinking about where the biggest driver for that would be, and it feels to me, my instinct is that the biggest interest, those trillions of dollars that Cecilia mentioned, that this is international capital. At the moment, and for very understandable reasons, Ethiopia doesn't accept in foreign portfolio investment yet. I know there's thinking in the works about whether and how to do that. But it feels to me that a regulatory framework that can incentivize that foreign investment in the right way is the thing that will really tip that cost benefit, because it's those international investors that I think really have ESG at the top of their minds at the moment. So if we can get a framework that does that right, then I think that will go some way to creating this right kind of signal and policy framework.
Yeah. No, thank you. Cecilia, very quickly, the framework, based on your experience at FSD Africa, how can a national ESG or sustainability framework strengthen the country's ability to mobilize sustainable finance? Just very briefly.
Yeah, I think it provides clarity, which of course investors love, clarity and transparency, and it becomes a common understanding between your project developers, because the earlier you integrate these aspects, the less it costs. If you're building a building and you have it certified green from the outset, it doesn't have to cost that much, but if you're trying to retrofit, that will cost much more. So this kind of framework sets a clear common understanding of what is green in the Ethiopian context, so it becomes easier for project developers, corporates, investors, regulators to have a common and efficient understanding. And of course, that can also, as we said, attract new investors and also concessional capital that can be blended into these instruments to create financing on better terms. Lastly, I would say that sustainable finance or Ethiopia's priority sectors are so fundamentally sustainable, and why not really make the capital markets a globally leading sustainable capital markets? In other markets globally, it's ESG indices or a green finance board as a separate segment is something that has been added at the end. But Ethiopia is very well placed to lead and really differentiate yourself globally by having sustainability as a core part of the main exchange and the regulation, and really set the market apart that way.
Yeah. I think in the interest of time, we'll have to stop there, but I just want us to do a very quick round in one sentence each, just as Ethiopia in the run-up to COP32 in 2027, what is the single most important action that the country should take in the next 2 years to advance ESG integration? Just in one quick sentence, maybe starting from you, Jerome.
Yeah, thank you. A lot on my mind, so let me, maybe most self-interestedly, we are going to be working on a guideline for issuance of sustainable finance here in Ethiopia. So I think it would be great if everyone can really contribute, all the stakeholders, the potential issuers, investors, the new investment banks, so that we could almost, right out of the gate, get some issuance after the publication of the guidelines, and so do some form of pilot transaction as part of the creation of that guideline.
All right, Assefa.
Thank you. Just leverage the existing green legacy project that we have to basically accept, Cicilia's recommendation for our capital market to be green and sustainable, basically leveraging our green legacy initiative. Thanks.
Right, Louise?
Thank you. I've got two recommendations. One is demystify the terminology quickly, because even on this panel, we used green to define risk management as well as green to define impact focused, which is really what taxonomies are about. So demystify that and then get the data points. The data points you mentioned were on target, and there's more to add. The sooner that you start getting data from the private sector to link that to financial performance, you'll start to see the business benefit. So we did that in IFC's portfolio, and we saw significant outperformance with companies that know how to embed ESG in their businesses. So there is a business opportunity. China got that data quickly, and it has helped move their green market. So I would recommend the same.
Thank you. Cecilia, a quick one?
If you're looking to raise capital, make use of the technical support available and issue green and sustainable themed bonds. And that's both for the private sector, for the sub-sovereign, and for the sovereign to prepare those kind of instruments.
Yeah, wouldn't it be great to have the first green bond launched at COP32? Yeah. So I'm gonna just a sort of a wider point, I think, to conclude with. All of these specifics are going to be essential to mobilizing this sector and this market. I would also encourage the government to just continue driving through its wider reform program. The Homegrown Economic Reform sets a vision for a more open private sector-led economy in Ethiopia. That is the foundation upon which all of this is going to be built. So really driving through that wider reform program, creating the macro stability that is an essential prerequisite for investors looking to Ethiopia.
Thank you very much. Please join me in applauding our distinguished panelists. Thank you for your insights.